Susmit Patodia, the head of sales of the institutional equities business at Motilal Oswal, joins us from the sidelines of the Motilal conference. Susmit, good morning. Thanks much. Well, now you must have assessed the mood. What is the sense you're getting? Are people still willing to buy on dips? What is the general investor mood there?
Good morning, everyone. The general mood is quite upbeat still. India continues to be one of the few countries with a 7% GDP growth rate. 7% in this decade is like the new 10% of the yesteryears. We have not only seen interest of FIs in the equity markets, but also now the debt markets have followed through as well. And I think that's a big sign of confidence for the Indian economy as a whole.
Okay. Susmit, morning. A lot of Asia funds are overweight India by almost 100, 200 basis points. So in a sense, India is a bit overowned. Would that be a concern if there is any kind of global risk-off towards the end of the year?
So the India overweight is again a function not specifically with regards to India, but overall EM flows. If you look at the EM flows, has been very, very strong over the last few weeks in this calendar year. And frankly, with commodities still being not in great shape, most of the other EMs, which are commodity dependent, have not found flavor with investors. So unless we see a massive commodity reversal in terms of leg up, I don't think this overweight is to be worried about. The bigger worrying factor would be the overall EM flows rather than India overweight as such.
Susmit, when you were answering me just a little while ago, you said that there is a lot of interest in Indian debt, is it?
Yeah, so we're seeing debt markets rally as well, and we're seeing a lot of investors like the debt counterparts of our equity fund managers also wanting to know about India more than ever before.
Okay. There have been a little bit of DII outflows, sales, not really too much of outflows. What is the sense you're getting at Motilal Oswal itself? Are your funds starting to see a petering out or, profit taking by investors? And the other investors who have come in, what are they saying, domestic guys?
So I may not be able to comment specifically on Motilal Oswal AMC, but the overall trend of the last 2 months has definitely reversed than what we saw in the earlier part of the year. There has definitely been some flow towards balanced and debt funds as the returns there have outpaced the equity funds. And that's what's leading to a little bit of tepid flows into the equity funds. So if you look at the balanced fund flow and the debt fund flow, that's still been massive. So it's not like a complete withdrawal of retail funds from the mutual fund industry as a whole.
Okay, then before we let you go, a quick comment from your end on what you've made of the earnings season so far. It's been sort of a hit and miss in certain sectors, but what's your own prognosis here on?
So the earnings is very similar to the last 5 quarters, if I may say, where top line growth has been very, very anemic. This is the 6th consecutive quarter of less than 5% top line growth. We have to go back 10-12 years to see this kind of a phenomena. The margin uptake continues, so your EBITDA growth for this quarter continues to be in mid double digits, which is in line with our estimates. We are hoping that with a good monsoon and rural economy pickup, and as the PSU banks cleanup gets over, the top line growth should return for the companies that we cover.
All right, we'll leave it at that.